everyone, you are watching the weekly Forex Outlook by Light Forex. From this video, you will discover the prospects for the main currency pairs for the upcoming days. As you can see on the chart of the US dollar index, as we expected, American currency failed to overcome resistance levels which stopped it during the recent weeks and went lower. The USD is under pressure as trade tensions have intensified, and this time we are talking not only about the trade war between the United States and China, but the recent spike in trade conflict between the US and Mexico. Washington said that 5% tariff will be applied to all Mexican imports from June 10th, and then the tariff will be increased gradually until illegal migration stops, and that is certainly a kind of difficult question to estimate when it will stop. Still, the tariff great risk not only for Mexican economy but for the economy of the United States, and as a result, market players shifted to other safe havens besides the USD, to Japanese yen, to Swiss franc, and to gold, and the US dollar suffered. If we look at the chart of the US dollar versus the Mexican peso, here of course the USD strengthened and the peso declined. Some stabilization took place at the end of the week, but of course the Mexican currency looks vulnerable versus the USD. The USD is a stronger currency and more resilient than the peso. Let's have a look at the economic calendar at lightforex.com to see which events await us in the upcoming days and what events we will be able to trade. China released private manufacturing PMI during the weekend, and it was rather good. It signaled expansion of the industry. However, that did little to improve the overall sentiment of the market. On Monday, during the US session, America will release ISM manufacturing PMI, important indicator which will tell us how US manufacturing is doing. On Tuesday, the 4th of June, and by the way, happy summer, congratulations, there will be the meeting minutes of the Reserve Bank of Australia, and according to the forecasts, the RBA will reduce its benchmark interest rate from 1.5% to 1.25%. This decision of the central bank is already almost completely priced in by the market, so the further movement of the Australian currency will depend on the central bank statement, on how serious the risks are according to members of the regulator, and whether RBA signals another rate cut in July or maybe in August. If it does, of course, the Australian currency will fall further. Also, have a look at some data from Australia. The country will release retail sales figures early on Tuesday, and the release will be followed by Australian GDP figures on Wednesday. So this is important, and well, we will see how trade wars are affecting the Australian economy, which is sensitive to China, as China is Australia's key trading partner. So what else do we have here in the calendar? Another important thing will be the speech of Federal Reserve Chair Powell on Tuesday. On Thursday, we will hear, by the way, from the Bank of Japan's governor and Bank of England's governor. So a lot of speeches. On Wednesday, there will be the release of British Services PMI American ADP non-farm employment change, and ISM non-manufacturing PMI, another key indicator for the US economy. On Thursday, brace yourself for the meeting of the European Central Bank. It is clear that the European economy is in a very weak condition right now, and trade wars may have a negative impact on it, driving it even lower. German retail sales went down in April. The nation's labor market is not bright either, and this is the key economy of the region. We know that there are a lot of political tensions between the European economies, between Eurosceptics and pro-European parties. There are some political problems in Germany, so this is all creating a negative picture. And the European Central Bank is expected to reveal the details of TLTRO program, which is aimed to give banks more money, and to update economic projections so that we will get fresh forecasts for inflation and economic growth of the euro area. The key question is how the ECB views the situation, how negative Mario Draghi sounds at the press conference, whether he will signal at the necessity of more stimulus in the future, and if he does, the euro will be under pressure. All in all, the fundamental picture for the euro is in favor of selling the euro on its attempt to recover rather than trying to buy the euro on the dips. And also Thursday will bring some Canadian figures. And Friday, the first Friday of the month, and guess what? America will release non-farm payrolls, also known as NFP, the indicator which usually provokes big movements in all currency pairs containing the USD. Also, the United States will publish average earnings indicator and unemployment rate. So, given the fact that traders start to worry about a potential recession in the United States, this data will be once again extremely important, and we will see big movements in the US dollar. Canada will release employment data as well on Friday, so it may be an interesting setup for the US dollar Canadian dollar currency pair. We return to the charts to have a look at the chart of the US dollar versus the Chinese yuan. We can see that after the USD strengthened significantly, it is now consolidating. There is a serious resistance ahead, located in the area of 7, and the fact that traders are worried about the future of the US economy is stopping this currency pair from more on upside. If we see that support around 689 is breached, then we will have a look and target lower levels like 686 and lower. The situation didn't change much on euro-dollar weekly chart. Once again, euro is trading between the levels of 1.11 and the area of 1.1250. 1.11 is a major support. The decline below this level will make us target 1.10 and potentially significantly lower levels in the future. The daily chart showed us that there was an attempt of the euro to get higher, but it was stopped by the 50-day moving average. The moving averages of the daily chart are having a negative bias, and that is in favor of negative dynamics for the euro. Some pressure is here right now, as the currency pair is not able to overcome levels around 1.1185. So the focus is on levels around 1.1140 in the short term. And well, given the fact that we await the meeting of the European Central Bank and Mario Draghi is known for his ability to make the euro go lower. The risks are certainly on the downside, and an attempt to recover even to resistance at 1.1280 will likely meet significant pressure, and the euro is not likely to get above 1.13 in the upcoming weeks. The British pound fell to lower levels last week, testing levels as low as at 1.2560. Then some recovery took place, and we can see that the pair was supported by the Fibonacci level of 78.6 of the advance from the January low to the high of March. However, the support will likely be temporary, given the fact that the fundamental picture for the British pound is very bad. We know that Theresa May will depart on Friday as British Prime Minister, and during the whole month of June we can expect a battle for the position of Prime Minister. Now 11 candidates are in for the job, and most of them are okay with the possibility of no-deal Brexit. That is a negative thing for the British pound, and although much of the negative news are already priced in, of course the currency doesn't have a lot of strength here. It may have some strength versus the USD, but the next resistance at 1.2770 will be a difficult obstacle for the bulls. And if you want to trade the uncertainty line ahead for the British pound, consider selling such pairs as GBP versus Japanese yen and British pound versus the Swiss franc. There are pretty negative setups where the USD made a big movement to the downside versus the Japanese yen. So we can see that a kind of top was formed on the chart, and the market went down from the resistance line, breaking below the level of 108.55. The next level we have in mind is 107.70, and it looks likely that even if the US currency is able to recover, it will meet significant resistance in the area of 109.20, 109.50. All in all, the short-term dynamics will depend on the quality of the US data, ISM manufacturing and non-manufacturing PMIs, and non-farm payrolls. However, in the long term, in the medium term, the yen seems to be stronger than the USD, and the situation will persist that way until we get some positive news about trade. The US dollar versus the Canadian dollar tends to be more sideways, so we don't see that kind of exciting dynamics here. The situation may be a bit different on Friday when both nations release employment figures. If the data differs, we will see a bigger movement, but we can still see that kind of sideways dynamics here. The Australian dollar is recovering versus the USD a bit, as the US dollar suffered in general. However, given the fact that the Reserve Bank of Australia is about to cut interest rates, the recovery looks temporary. The significant resistance is at 0.70, and the levels of 0.6865 and 0.6830 will be inside. Potentially, the Australian dollar has in it to break these levels and go somewhere significantly lower. The New Zealand dollar is recovering, trying to form a double bottom here. Now, the recovery is not very rapid, but it is certainly possible. We do not have that kind of inflow of data for the New Zealand. But given the fact that this is a risk-sensitive currency, we should be rather careful with targets on the upside, and acknowledge resistance which exists at 0.6585 and 0.6660. Gold managed to make a breakthrough to the upside. We can see that stock markets are declining all over the world, and given the risk aversion, gold is a safe haven asset, so it is perceived as a refuge by various kinds of investors. And the weakness of the USD is making gold stronger. In this situation, the precious metal is targeting levels around 1320, 1325, and it will need to overcome this obstacle to get to 1350. The levels around 1300 will now represent a kind of support. The outlook for gold has definitely become better once it managed to overcome the resistance line which limited it during February and during the months of spring. Finally, we can see that oil made a big break to the downside on concerns about demand for the commodity after the global economy is hurt by trade tensions and protectionism. We are now below the level of 64, and levels of 60, 59 and 58.60 are the potential targets on the downside. The picture, of course, deteriorated, and a return above 64, 65 is needed for the commodity to feel a bit better. This is all for today. It is an exciting week ahead, and trade with Light Forex, and subscribe to the channel if you liked the video.